December 3rd, 2017. In a quarterly review room in Redmond, a mid-level program manager pulled up a chart showing Windows Phone market share hovering at 0.03%. The room fell into a specific kind of corporate silence. Not the silence of shock, the silence of collective relief that the decision had finally been made for them. Everyone in that room had watched Microsoft spend billions of dollars and more than a decade trying to own the mobile operating system. Everyone knew the end had been coming for years, but nobody wanted to be the one to call it. The chart on the screen was from IDC data, and it showed something the quarterly review was never supposed to reveal. Windows Phone had fallen below the threshold of statistical significance. It was a rounding error in a market of 2 billion devices. The program manager later told a colleague that what haunted her was not the number. What haunted her was how quickly the room moved past it. The next slide was about Azure revenue. Mobile was never mentioned again, but here is where the descent begins. The story Microsoft told the world was simple. We entered mobile too late. The competition was too strong. The ecosystem was stacked against us. And that story is true as far as it goes. It is also a lie by omission, because the real cause of Microsoft's mobile collapse did not happen when Windows Phone failed. It happened years earlier when Microsoft decided that mobile was a hardware problem. That one assumption, buried in strategy, decks, and executive summaries, shaped every decision that followed. And it was wrong from the first slide. To understand why, you have to go back to 2007, not to the iPhone launch. Everyone knows that story. You have to go back to the meeting that happened the same week, 3 floors up in the same building where a different division was presenting its own mobile strategy. Microsoft had been working on mobile software since the late 1990s. Windows CE, Pocket PC, Windows Mobile. By 2007, Windows Mobile powered more than 50% of all smartphones sold in the United States. The iPhone launched in June of that year. By December, Microsoft's mobile share had already begun its slow erosion. But the company did not panic because the engineers who built Windows Mobile looked at the iPhone and saw something their executives missed. Here's what the evidence shows. The engineers saw that the iPhone was not a better phone. It was a different category of device entirely. It ran on a mobile operating system that Apple controlled end to end with a touch interface that required rethinking every interaction pattern. The engineers told their managers Microsoft needed to start from scratch. They estimated it would take 18 months and cost roughly $200 million. The managers took the proposal to the executive committee. The committee asked one question: would this new operating system run existing Windows mobile applications? The engineers said no. The committee said the project was too risky. Now consider the asymmetry. Apple was willing to burn its own successful iPod business to build the iPhone. Microsoft was unwilling to risk its Windows mobile revenue stream, and that revenue stream, by the way, was already declining. But here is where the psychology gets interesting. Microsoft's executives were not stupid. They were rational actors inside an incentive system that punished long-term bets. The engineers who wanted to rebuild from scratch were asking for permission to destroy a business that was still generating hundreds of millions of dollars. The committee could not see the future. They could see the next quarter, and the next quarter Windows Mobile was still shipping. That decision, made in a conference room in Redmond in the fall of 2007, set in motion a chain of events that would cost Microsoft more than $40 billion in market value over the next decade. But the cost was not just financial, it was structural. Because Microsoft had another option. It had an option that, if you read the academic literature on platform competition, looks almost textbook correct. That textbook option is what we are getting to in a moment. But first, ask yourself how many times you have watched the same pattern play out in crypto. Teams clinging to a legacy architecture because abandoning it feels too expensive, even when the market is already moving. If you want to keep spotting these structural asymmetries before the crowd does, subscribe to the channel. And in the comments, tell me the one project you have seen make the exact same mistake Microsoft made in that conference room. I will read every single one. Remember the Kusumano study from 1992, the one that found incumbent firms often lose to entrants when they overcommit to legacy architectures. Microsoft was committing the exact error the study described. The company was optimizing its mobile strategy around the Windows installed base. It was building a phone that ran Windows apps, that used Windows development tools, that fit inside the Windows ecosystem. And that was the trap. Because the mobile market did not reward compatibility with desktop software, it rewarded experiences designed for the mobile form factor. Microsoft kept trying to fit a phone inside a Windows-shaped box. By 2009, Google had released Android. By 2010, Android had surpassed Windows Mobile in market share. Microsoft finally admitted it needed a new operating system. Windows Phone 7 launched in October of 2010. The reviews were excellent. Critics called it beautiful, fast, genuinely innovative. The live tile interface was ahead of its time. The unified messaging system was something iOS would not replicate for years, and yet by 2012, Windows Phone had captured less than 3% of the global smartphone market. The question that broke the analysts was why? The product was good. Microsoft had deep pockets. It had relationships with hardware manufacturers. It had the developer tools. It had everything a platform needs to succeed, according to every study on platform competition written in the last 30 years. And it still failed. The answer is the one Microsoft never wanted to admit. The product was good. The strategy was wrong. And the strategy was wrong because the assumption was wrong. Microsoft believed it could win mobile by controlling the operating system. But mobile was not a platform war. It was an ecosystem war. And Microsoft did not understand what an ecosystem actually required. Here's the contradiction that should have changed everything. In 2013, a group of Microsoft researchers published an internal study of mobile app developer behavior. They found that developers were not choosing platforms based on technical features. They were choosing platforms based on user base size. A developer with 10,000 iOS users would not switch to Windows Phone, even if Windows Phone offered better revenue terms. The switching cost was too high. The user base was the asset, and Microsoft did not have the user base. But here's where it gets recursive. Microsoft could not get users without apps. It could not get apps without developers, and it could not get developers without users. The platform was trapped in what economists call a negative network effect. Every quarter, it did not break out of that trap. The trap got tighter. The researchers presented their findings to the mobile division leadership. They recommended that Microsoft partner with a carrier to subsidize Windows Phone devices aggressively. They calculated that giving away 10 million phones to heavy app users would create enough developer incentive to kickstart the ecosystem. The cost was estimated at $3 billion. The leadership rejected the proposal. Instead, Microsoft spent $7.6 billion acquiring Nokia's phone business in 2013. You have to stop here and feel the weight of that asymmetry. $3 billion to solve the ecosystem trap. $7.6 billion to buy hardware that was already losing market share. Microsoft chose hardware because hardware was what Microsoft understood. Hardware had bill of materials, supply chains, gross margins. Hardware was measurable. Ecosystem dynamics are not. You cannot put ecosystem dynamics on a quarterly earnings slide. The Nokia acquisition was supposed to be Microsoft's Plan A, but according to Reuters, there was no Plan B. Microsoft CFO Peter Klein told reporters in 2013 that the company was committed to its mobile strategy and had no alternative path. When a reporter asked what would happen if the Nokia acquisition did not turn the tide, Klein paused for what witnesses described as an uncomfortable silence. Then he said the company was confident. By 2015, it was over. Microsoft wrote off the entire $7.6 billion Nokia acquisition. The employees who had moved from Finland to Redmond were laid off in waves. The final Windows Phone prototype was destroyed in a parking lot in Espoo. And yet the company still did not ask the question it should have asked in 2007. Not the question about mobile, the question about itself. What does it mean when a company with 70,000 engineers, $40 billion in cash, and the most dominant software platform in history cannot win a market it desperately wants? The academic literature offers an answer. Christensen's study of disruptive technology found that dominant firms fail not because they are incompetent, but because they are too good at serving their existing customers. Microsoft's existing customers were PC manufacturers and enterprise IT departments. Those customers did not care about mobile. They cared about Windows licenses and Office subscriptions. Microsoft built a mobile strategy that served those customers, and it failed. But Christensen's theory is only half the explanation. The other half is psychological. Microsoft's executives believed that mobile was a technology problem that could be solved with more technology. They believed that Windows Phone failed because the product was not good enough. So they made the product better. They improved the camera, they improved the processor, they improved the screen, and the market share kept shrinking because the problem was never the product. The problem was the assumption that a good product is enough to win an ecosystem war. That is the quiet tragedy most traders never see. The assumption that a better product alone wins the war is what keeps you chasing the next indicator, while the real fight happens in ecosystem positioning. If you want to stay ahead of these hidden dynamics, subscribe now and become one of the few who reads the game beneath the game. Drop product fallacy in the comments if you have watched something you believed was superior. Lose for reasons that had nothing to do with quality. Think about what that meant for the engineers who built Windows Phone. They poured 4 years of their lives into a platform that was technically superior to Android in almost every measurable dimension. They watched it die not because it was bad, but because it was orphaned by its own parent company. Microsoft refused to starve the platform, but also refused to feed it. The engineers called it the death by 1,000 cuts. The tragedy is that Microsoft could have won. It had the resources, it had the talent, it had the timing. Windows Phone launched before Android became dominant. If Microsoft had committed to the ecosystem strategy instead of the hardware strategy, if it had spent $3 billion subsidizing users instead of $7.6 billion acquiring factories, the entire mobile landscape might look different. But Microsoft could not make that bet, not because it lacked the money, because it lacked the organizational psychology to bet on a market where it could not measure the return. You have probably felt this exact dynamic in your own work. The project that gets killed is never the one that is obviously failing. It is the one that is succeeding slowly in a way that does not fit the reporting structure. The feature that never ships is the one that requires rebuilding the foundation instead of adding a button. Microsoft's mobile collapse was not a technology failure. It was a measurement failure. The company measured hardware revenue, software licenses, developer registrations. It did not measure ecosystem health, developer sentiment, user attachment. It measured the things it knew how to measure, and the things it did not measure killed it. The story Microsoft tells itself today is that mobile was a missed opportunity, a footnote in an otherwise successful history of platform dominance. But that is the wrong story. The right story is that Microsoft's mobile failure reveals something uncomfortable about every large organization. The more successful you are at doing one thing, the harder it becomes to see that the world has shifted underneath you. Microsoft was the best software company in the world, and that excellence made it blind. Satya Nadella, who became CEO in 2014, later admitted publicly that Microsoft clearly missed the mobile phone. He said it was one of the most difficult decisions he ever made to officially kill Windows Phone. But here is the layer of the descent that nobody talks about. The decision was not made when Nadella announced it. It was made years earlier in a series of smaller decisions that each seemed reasonable at the time. Not prioritizing the mobile operating system over Windows revenue. Reasonable, not burning $3 billion on user acquisition when the quarter looked uncertain. Reasonable, not rebuilding the app runtime to support native mobile experiences. Reasonable, each decision was defensible. Stacked together, they formed a wall that the company could not climb. Bill Gates, in an interview discussed by Computer World, called Microsoft's early mobile strategy a mistake. His word was not failure, it was mistake. And the distinction matters. A failure is something you tried and could not do. A mistake is something you chose not to try. Microsoft never really tried to win mobile. It tried to protect Windows. And it lost both. The studies on platform competition all converge on the same conclusion. The winner is not the best technology. It is the platform that attracts the most complementers, the most developers, the most content, the most users. Microsoft understood this intellectually. It had won the platform war on PCs by attracting developers. But it could not replicate that success on mobile because it could not see that mobile was a different kind of platform. Mobile did not reward compatibility. It rewarded focus. And Microsoft, by its nature, could not focus on something that did not feed its core business. If you have ever watched a large organization kill a promising project through benign neglect, you know exactly what Windows Phone experienced. The project was not canceled. It was just never fully funded, The team was not laid off. It was just never given the resources to succeed. The quarterly reviews never said stop. They said keep going, but with fewer people, less budget, and no strategic priority. That is the slowest form of corporate death, and it is invisible to everyone except the people living through it. The final chapter of Microsoft's mobile story is the one that should haunt anyone who has ever been the underdog in a platform war. By 2017, the Windows Phone team had been reduced to a skeleton crew maintaining a platform with 0.03% market share. The developers had left. The users had left. The carriers had stopped stocking the devices. And then in a final gesture of surrender, Microsoft announced it would stop developing new features for Windows 10 Mobile. The official statement said mobile was no longer a focus, but the unofficial story, the one that leaked through former employees and anonymous blog posts, was more painful. The team had been working on a next-generation mobile operating system codenamed Andromeda. It was supposed to run on the Surface Phone, a device that would finally bridge the gap between PC and mobile. The prototypes were real. The operating system was functional. The hardware was beautiful. And it was canceled because the executive team could not justify the investment to the board. The decision was made in a 30-minute meeting. The product manager, who had spent 2 years on Andromeda, was told to pack up his office. When he asked what would happen to the code, he was told it would be archived. When he asked if there was any chance it would ever ship, he was told no. He later said that what hurt most was not the cancellation itself, it was how quickly the company moved on. The next meeting on the calendar was about Microsoft Teams. This is the open loop that Microsoft never closed. And it is the loop that matters most, not just for Microsoft, but for anyone who has ever been inside a large organization, watching it make a predictable mistake. The question is not why Microsoft failed in mobile. The question is what organizational psychology prevented it from seeing the failure coming, and then from acting on what it saw. Microsoft had the data. The internal study of developer behavior showed the negative network effect. The quarterly reports showed market share declining. The competitive analysis showed Android and iOS building insurmountable leads. The company knew, and it did nothing, because knowing something and acting on it are separated by a gap that most organizations cannot cross. The gap is not information, it is courage. The courage to admit that your current strategy is wrong. The courage to bet on something that might fail. The courage to tell the board that the next quarter will be worse so that 5 years from now, the company might exist. Microsoft did not have that courage in 2007. It did not have it in 2010. And by 2015, the opportunity had passed. The company survived. It thrived, in fact, on cloud revenue and enterprise software. But it lost something in the mobile failure. It lost the ability to believe that it could win a market from behind. That loss is invisible on the balance sheet, but it shows up every time Microsoft enters a new market and hesitates at the moment of commitment. The final piece of evidence is the quietest. In 2020, Microsoft released the Surface Duo, a dual-screen Android device. It ran Android, not Windows. The company that once controlled 90% of the operating system market was licensing its competitors' software for its own hardware. The engineers who built the original Windows Phone prototypes watched that launch with a specific kind of pain. They knew what the Surface Duo could have been. They knew it should have run Windows. They knew that the decision to use Android was not a technical decision. It was an admission. The platform war was over. Microsoft had surrendered. That moment, the Surface Duo running Android, is where the story becomes yours. Because the same institutional inertia that killed Microsoft's mobile ambition is alive in every market you trade, every algorithm you fight, every chart that moves against you. If you want to keep catching these burial ceremonies before the crowd arrives, subscribe. We will never stop running the autopsy on giants who forgot how to move. And before you scroll, drop the word surrender in the comments if you have ever watched a dominant player refuse to pivot until it was too late. The surrender happened in pieces. First the market share, then the apps, then the engineers, then the prototypes, and finally the vision itself. What remains is a lesson that every underdog should internalize. The institutions that seem unbeatable are often the most fragile. Their strength is their weakness. Their success is their blind spot. Microsoft could not win mobile because Microsoft was too good at winning PC, and that paradox is not unique to Redmond. You will never know if that meeting in 2007 had gone differently, what would have happened. You will never know if $3 billion in user subsidies would have cracked the ecosystem trap. You will never know if Bill Gates, Steve Ballmer, or Satya Nadella had made a different call at any of the critical junctures, whether the smartphone market would look different today. But you already know the shape of that question. You have seen it in your own life, the moment when you had a choice between protecting what you have and building something new, the moment when the safe decision was the wrong decision, the moment when you knew, in your gut, that the data was telling you something you did not want to hear. That is the open loop that Microsoft's mobile failure leaves behind. It is not a question about smartphones. It is a question about you. The next time you are in a room where the data says one thing and the incentives say another, which voice will you listen to? The quarterly report or the engineer who's asking for permission to build something that does not exist yet? The answer is not in PowerPoint. It is not in the studies. It is not in any of the evidence you have just seen. The answer is in the silence of that room in Redmond in the fall of 2007, when a group of people who should have known better chose to protect what they had instead of building what could be. That silence is still waiting for someone to break it. That silence is still waiting for someone to break it. The room in Redmond is just a meeting room with a table and chairs and a projector that has been showing presentations for decades. But it is also a mirror. Every time you sit in a meeting where the comfortable answer wins over the true one, you are sitting in that same room. The agenda is different. The numbers on the spreadsheet are different. But the shape of the decision is exactly the same. Microsoft walked away from mobile with its quarterly revenue intact and its long-term trajectory permanently bent. The company is worth more today than it was in 2007, but it is a different kind of company. It is a services company, not a platform company. It sold its users to Google and Apple and accepted a role as a software provider on someone else's operating system. That is not a failure of technology. That is a failure of nerve. The engineers who left Redmond after the mobile collapse scattered across the industry. Some went to Apple, some went to Google, some started their own companies. They carried with them the quiet knowledge of what it felt like to be on a winning team that was never allowed to win. They learned something that no management book teaches. The most dangerous phrase in any organization is not, "we are losing." The most dangerous phrase is, "we have always done it this way." You will carry that lesson too if you choose to. The next time you see a market shifting beneath your feet, you will remember the room in Redmond. You will remember the quarterly review where a rounding error was the headline. You will remember that Microsoft had every advantage except the willingness to use it. And you will ask yourself whether you are protecting what you have or building something that does not exist yet. That question has no easy answer, but it has a cost. The cost of answering it wrong is not just market share or revenue. It is the slow erosion of the belief that you can still win. That belief, once lost, is almost impossible to recover. Microsoft never recovered it. The company that built the platform of the 20th century surrendered the platform of the 21st. And the surrender was not announced in a press release. It was decided in a series of quiet meetings where the data was clear and the courage was not.